Going over the trades on the day for Wednesday, May the 17th. We had an up day today. We broke our losing streak, which has been a pretty significant losing streak, going into a drawdown cycle. But we're back up on the week with today's gains. We had losses on Monday and Tuesday. We're down on the month by about almost 4%, but up on the quarter a few percentage points and up on the year. And so it was good to have these gains today. And I'll show you the trades, and we'll go over that. The live results were about $750 off. We had some automation errors, lots of crashes, dealing with lots of crashes in the Tradestation platform. Extreme amount of crashes, more than normal, on different computers, different dedicated servers, different versions of Tradestation. I have it on my desktop, I have it on a dedicated server, and so Tradestation is resolving some issues on their side. Pretty buggy setup from the last update, and so hopefully they'll get that resolved soon, and we won't have to deal with all these crashes. It makes it extra stressful and difficult when your platform is crashing, and so that affected our results a little bit on the E-minis. The micros were in line, though. Some of the issues related to the micros lined up, and so it was a good day for the micros to be in sync with the hypotheticals, but down off on the E-minis for the 250K portfolio. So let's go over the trades on the day. After I go over this, I want to go over the market in general and tell you about the short of the year potential. Cover 3 up on the day, 575, hit his profit target. Tick Pulse, E-mini S&P up 350. This is my research platform. I updated it, and it has a new view. It's the Build 68, I guess, in Tradestation 10. And it had the black view, I guess, and this is the classic view or the light view. I don't know if the different views cause it to crash less, but when I reinstalled it, this is the view that came up, and it installed slightly different this time than it normally does. It looked a little different. So I don't know if they've updated some things. Hopefully this is a solid build now, and we won't have as many crashes. Tick Wave up on the day, and then Adaptive Moving Average up on the day. If your indicators aren't showing these correctly, if you're a subscriber, be sure to change the time input. This should be 1615 instead of 1600. If it says 1600, this will say minus 3750. So Adaptive Moving Average up on the day. Momentum Reversal down minus 250. Tick Count Trend Dynamic Turnaround plus 775 at its profit target. Opening chop minus 112.50. Tick Chop plus 37.50. So those are S&P trades on the day. NASDAQ trades. Cover 3 was down minus 525. Viper plus 890. Plus 1110 on Tick Pulse. EVP1 minus 1,025. And then plus 2,300 on Tick Pullback. And plus 260 on Tick Reversal. Minus 425 on Robot. We got a gap fill in reverse. I meant to go back and test that today. There's a lot of ideas I want to test, a lot of strategies I'm working on. The constant platform crashes are really slowing my research down, though. So I'm not able to get as much research done. And so Tick Count Trend plus 505. Minus 235 on Momentum Reversal. Zigzag minus 430 on the day. And so let's go over the market in general. You can see the quarter ended right here. This is the S&P futures, and just draw a straight line through the quarter, just back and forth through the close of the quarter. And it's as if the market is just focused on one thing: resolution for the debt ceiling. And it's interesting to think that the market said, all right, as we enter quarter 2, we're not going to go anywhere until we get a debt ceiling resolution. And so no one really saw that coming, but it almost seems as if that's what it's thinking about. The rally today seemed to be based on the idea, I don't know if it's real or perceived, that there's going to be a debt resolution. Sometimes the market just gets together and they decide, hey, the president said something. That means the debt, it's going to be resolved, and so the market rallies. The president came out and spoke about this time, and the market just rallied. S&P rallied 25 straight up points from 41.45 to 41.70. So it was choppy at the beginning of the day. We were down about 1.5K right at the beginning of the day. And so the day session started right here. Market sold off, and it chopped around in here. You see this spike up right here, and then a spike down. Let's look at it on a 1-minute chart, and you can see what I'm saying. You can see the spikes in this market, just extreme. It's like the mean reversion trade. There's a force that's trying to mean revert everything that breaks out. So the market sells off, brings it back, it rallies, it gets slammed, it rallies. And then it gets to here and it surges. And so it broke through that mean reversion trade and captured about 25 points in the S&P straight line. And so you see chop here, chop here. NASDAQ, I wouldn't be surprised to see. I was not going to be surprised to see a 500-point rally because we've had so much chop, so much pinup. It's surprising to me that it hasn't broken out even more one way or the other, but we have a dull market on a daily chart. So on a daily chart basis, don't short a dull market seems to be the case here if you look at how dull this market is on this quarter. And so it's very hard. I've experienced these kind of markets before, and they're just very hard to short. Any short trade doesn't last very long, and you know, the market should go down. Would be glad if it did go down some. That would give us some more opportunities, but it's just typical. It's just difficult to short this kind of market right here, right now. So that's what I'm looking at. Also, I talked about yesterday the short of the year, the potential short of the year. 3 typical reasons. If this market rallies into June 1st, when there is supposed to be the resolution of the debt ceiling, it could be the short of the year. And the reason I say that is 3 reasons. One, profit taking. If there is a resolution on this and the market rallies into it, the market rallies into anticipation that it's going to be resolved. So there's profit taking and the market sells off. That's a discounting mechanism. If there is no resolution, there could be panic selling. There could be, no one knows what would happen if there is no resolution to the debt ceiling. These are fundamental and psychological factors for a potential discretionary short or just an underlying trend if you want to bias your strategies to short trades on June 1st based on this concept. And so profit taking, and then the fear trade that could kick in as well is number 1. So the second reason, these are A and B, so I have 3 reasons: profit taking, potential fear if there's no resolution. The second reason, and so I said 3, but there's really 2, is the QT kicking back in. Right now, there is still bond purchases by the Fed as we go into the debt resolution. If the debt ceiling is resolved, then those bond purchases will become bond issuances, and then QE will be alive again. Right now, QT has kind of neutralized the last 6 months, and so QT will kick back in, and that could be a fundamental reason for the market to go down. We'll see. Price is always the best indicator in our short-term trading systems. Focus on price. It doesn't focus on these psychological and fundamental factors, but we look for ways to line it up, and we look for reasons to keep our short positions in our strategies, because the main reason I bring this up is because sometimes when the market won't go down, you think, I should just bias it and take long-only trades. But there's always the potential for that cycle to go short. Another way to think about this is today. Wednesdays are one of the worst days, and if we're having a drawdown and Wednesdays are our worst days and Thursdays and Fridays are our best days, then I'm thinking, I should skip Wednesday because it's probably going to be another down day, and then I could step in on Thursday and Friday. And so we've had a strong losing streak, and so I still traded based on the losing streak, looking for a bounce on the losing streak. And so Wednesday was one of our worst days, but those things mean revert. I don't think that every Wednesday is going to be bad from now on. I'm not just going to not trade on Wednesdays just because every Wednesday over the past year is a net loss. If the past 5 to 7 years it improves the portfolio that we're looking at, I'm going to keep trading on Wednesdays, because you get these short-term cycles that last 12 to 18 months. Sometimes they can last that long. You don't always know how long they're going to last, but you can't just look at the last 3 months, because a 3-month cycle can change at any point. And so if you take your best systems over the last 3 months, might become your worst systems the next 3 months, and your worst systems over the last 3 months might become your best systems. And so you trade, if you try to bias it towards just trend strategies and get rid of all your counter trend strategies, or if you just say long only or just short only or day of week or day of month, those biases will flip on you quickly, and before you know it, you just go, you're out of sync and you go straight down, and all the trades you don't take you lose, and all the trades you do take you win all of a sudden, because it flips on you. And you want to maintain your diversity. The main thing is maintain diversity by having different strategies, trading every day of the week, and different methodologies, and managing your risk, because sometimes, you know, we're going through these losing streaks and you just pause because the market is really tough. And so right now we had a bounce today, and we're looking forward to tomorrow's trade. Give us a little bit of breathing room in that drawdown to go after more gains on Thursdays and Fridays. On Thursday. Once again, these are the trades on the day for Wednesday, May the 17th.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.